Get going then. All right, thanks everyone for listening. Now I'm going to tell you, you may have heard the story before, so it will be a bit of an update, or for those of you who don't know, this is a world-class potash asset in Eritrea, which is in the north of Africa. It's essentially part of the Middle East, and we'll be tapping into the Middle East in terms of future financing for the project, without a doubt. Now, there's a lot of interest in this project from around the world. I've had a very busy 4 years since we found this project, and we've had a huge amount of interest from the Middle East and Asia and equity markets around the world. So I'll get on with it. Hopefully that slide should click over. There it goes. Okay. So company snapshot, like I mentioned, we've got a world-class project. There's already 1 billion tonnes in a resource. Now we're expecting a scoping study update to come to the market in the September quarter. So that's in another few weeks' time. So I'm very excited about that. That should, to reiterate to everyone how positive this project is and how big this project is. We're currently in feasibility study, and we're going to produce 1 million tonnes per annum to start with, and the mine life is going to be in excess.
Lorry, are you still there? I think maybe you cut out. Well, it looks like maybe Lorry got muted or cut out for a second. Everybody just asked for your
It's currently $750 million is the capex required. This is approximately half the cost of any potash project in the world. So it's very unique. And the reason that we can do that is we have the world's shallowest deposit, and we are ideally located as well to the biggest growth market for potash consumption in the world, which is Asia, and I include basically India and China in that mix. So in terms of our approvals for mining, we're currently negotiating with the Eritrean government. This project is a joint venture where the government will own 40% of the project. So we're negotiating to sell 30%, which will take their ownership up to 40% with them at the moment. I'm hoping to do that sometime next year as we complete the feasibility studies. Currently well funded, got over $20 million in cash. That's enough to complete the DFS, and we'll expand the company from there. In addition to our potash assets, we have quality nickel and gold assets in Australia. And right now we are looking to do a demerger and create 2 listed companies on the ASX. One is dedicated purely to potash, and we'll have that team, appropriate team to deliver that project. And the other one will be our non-core or non-potash assets, and that will be a legitimate company exploring for gold and nickel deposits in Australia. So at the upcoming AGM, which is planned for November at this point, we're planning to organise all the voting from the shareholders to require to do that separation. So next slide now. So the next slide's a video, and I'll just keep on going, so you can look that up on our website at a later date. That's a great video of the project. It goes for about 6 minutes. Now I flicked on to the corporate overview. We've got a very tight share structure, 126 million shares. Market cap at the moment is about 120 million. Still very well much undervalued to where I believe we should be, given the size of our project. I mean, the scoping study for our project showed an MPV of over $1 billion. It's very rare to find these very big projects around the world, so we're very pleased to have landed it. Major shareholders, Sprott Asset Management out of North America, has been on board with us for about 4 years, very supportive in the potash space. And our newest shareholders, Meridian Capital International Fund, we just raised $9.5 million with them only 2 months ago at 95 cents per share, currently our share price is about 91 cents. So that's amazing what the market's doing. The market is very terrible essentially across the world, equity markets, but we're very confident that we can keep working on our project and keep delivering the news to regrow the share price of the company going forward. Okay, next slide. So in terms of our resource, it's very big. There's 1 billion tonnes already. It's all in the JORC and 43101 standards, the Canadian standard. There is a high-grade component to the resource, and that will be the starting resource, where we plan to produce 1 million tonnes per annum of silverite ore. I might add that silverite ore is the most common ore in the potash industry. 90% of all potash is produced from silverite ores, which we have. So very positive and very simple metallurgy going forward. Now this is a key point. I'm looking on page 6 now. A key point about why our project is different from every other project in the world, and that is simply we are so shallow. Now the Eritrean Colluli Potash project, the mineralisation starts at 16 metres below the surface, is our shallowest hit to date, and the entire resource is located above 110 metres below the surface. So for the life of us, we can't see how we cannot get a mine up and running. When you look at the rest of the industry, particularly in Canada, where they produce the most amount of potash, the Canadians are producing most of their potash from depths of in excess of 1,000 metres below the surface. Now people ask me a lot, they say, well, why hasn't the Eritrean deposits been mined before? And it's a good question. It's essentially because the area has been off limits for investment for about 4 decades. So the potash in Eritrea was originally discovered by American companies back in the early 1960s, and essentially since South Boulder was the first company since the 1960s to come back and be able to look at these assets with a view to development. So very exciting times ahead. Just a quick look at the economics that we've managed to produce from the deposit so far. And bear in mind we have got a major update coming out in September where we've re-looked at the project. We've got more data. We've done some more economic assumptions and more technical assumptions. But as you can see there, very robust economics, a 1.3 billion NPV using a very conservative discount rate. And that shows there a 17-year mine life. We know that the mine life is going to be much longer than that, and you can certainly look at increasing the production rate going forward. We're in the new study, we're looking at production rates up to 2 million tonnes per annum within the first 5 years of operation. So that's if you look at the potash price of where it is about now, about $500 a tonne. When we're producing 2 million tonnes per annum, that's revenues of $1 billion per annum for 20, 30, 40 years. So it's a very big operation. Any major company around the world that's either in the resource space or the potash space is having a look at us now and showing a lot of interest. And that's primarily because we have the lowest capex in the industry for any new startup. Now just flicking over to the next page, just waiting for it to flick on past. There it goes. This slide here, page 8, puts us in a bit of context with the rest of the industry. Shows us on the left-hand side with the lowest capex. It shows a lot of other want-to-be projects in the world, a lot of Canadian deposits, including BHP, Western Potash, and that. I guess it's my view that a lot of these projects will never go ahead, not in the next 10 years. And it'll be the projects that have the lowest capex and the best economics that are obviously going to get in development first. And we believe very much so that will be one of the only projects, only new potash projects to be built in the world in the next 5 to 10 years. So just a quick look at a high-level look at our project. We're located on the Eritrean-Ethiopia border in amongst a number of other potash companies looking for opportunities to exploit potash. We are the leaders in Eritrea. We probably have 95% of all the potash in Eritrea. The other 5% is held by a Chinese company, but we're probably 2.5 years ahead of that company, and we plan to install the infrastructure and build all the infrastructure ourselves to beat them to getting into production. We don't really rate the Ethiopian potash plays that highly, primarily because they don't have the attractive infrastructure that we do in Eritrea, being only 70 kilometres from the coast. You know, right now, as part of our feasibility studies, we've got environmental baseline studies, data collection. We're looking at all the social aspects from small villages on the coast and where we're going to be impacting. We're also looking at we've got a number of port studies underway, including we're attaching underwater buoys to examine the tidal ranges to design our jetty system. The port is going to be quite cheap in the total capex. The infrastructure price tag is about 120 million, which is quite cheap infrastructure because there's good natural locations to build a port. And when we're only looking at starting production at 1 million tonnes per annum, it's not a very big port we have to build. It's not like we're building a port for iron ore or coal terminal. It's a very small port. So it's very cheap, which is a great way to get started. Just waiting for the slide to click over. There we go. So page 10 is a bit of a quick cross-section of what our resource looks like. Now, the top layer, which is the yellow layer, is the high grade. That's the silvite. That's where we're going to start production. So we've already found 17 years or more of sylvanite. But the big prize is the material in the middle, which is the carnallite. Approximately 40% of the resource is carnallite. It's easy accessible. It's treatable. We're looking to expand production based on that carnallite. That'll come in the future. So very exciting times. And then we have the kainite, which is also another potash mineral, which is the future upside. Like I said at the start, this is a very big project. We expect there to be somewhere in about 1.75, nearly 2 billion tonnes of resource, which essentially has about 300 million tonnes of potash. So there's a very long mine life in this project, as is the case with most potash mines. If you have a look at the industry, every single mine that is in production today was originally developed and built by the government of the respective country. That goes for Germany, goes for Canada, it goes for South America, it goes for everywhere in Europe and Russia. So, and the reason for that is very high capital cost due primarily to the depth and the technical difficulties of potash mining. But we in Eritrea have a very unique situation where we have the world's shallowest deposit. As you can see from this cross section, it's only, it starts at 16 metres deep. The whole resource is less than 100, and we've got great infrastructure. So we've got a lot of positives to this project. Now, in terms of recovery and our assumptions, we're getting some good metallurgical test work back from the labs. We're expecting new recoveries from our sylvanite ores to be in the order of 90%. So that's world-class recoveries from some of the ore that we have here. Okay, just flicking on, a few more slides left. Okay. A little bit about Eritrea itself. Now, Eritrea is in the top of the Horn of Africa. It's has for a long time been quite unstable, if you like, in the region where you have Sudan and North Sudan being the two newest countries in the world, only realised last year. But Eritrea itself has been independent now for 21 years, but it's only been mining for 1.5 years. Nevsun Resources, which is a Canadian listed and Amex listed company, has been in production since the end of 2010 on a high quality gold project and soon to be base metals project. Very exciting for the country. That's their first operation. There is another operation which was recently sold by Chalice Gold Mines to a Shanghai construction group from China. That will be the second mine I understand to be built in Eritrea, and South Boulder Colluli project is expected to be the third. So it's a very young country. It's got a growing, it's getting recognition for its mining act around the world. Commercial deals happening easily in Eritrea, and we're very confident we'll be able to conduct a commercial deal and get the project financed and off the ground in quick time. So I'll just move on there. And a bit of delay. Here we go. I guess a little bit about the potash industry. On this slide there's another link to a video which I won't show, but it tells you a bit about the potash market if you're not aware. But the biggest buyers of potash in the world come from the Asia region. And you can see there China, India, Malaysia, Indonesia, and Thailand is another one in a mix with the other. And this is because of the world population. So the big population centers of the world are in the Asia region, and that's it. That's exactly where we have a major advantage to ship potash to. We are the closest supplier, potential supplier of potash to India, the second largest population center in the world. The Indians and the Chinese are screaming out for new suppliers of potash, so they are not reliant on the Canadians and particularly the Russians for their potash needs. So consequently we have a lot of Chinese and Indian interest to own the project or to be involved in the project or to buy the product. So we're talking to a lot of guys about how they can get involved and looking for the best solution for South Boulder shareholders going forward. But essentially the fundamentals for potash demand are very, very sound going forward, because it's all about changing diets and population growth. So we're very pleased that we're involved in the potash industry. Okay, now just look at our timeline to construction and ultimately production. Right now we're in the I guess the not so exciting phase of the feasibility study. We've found the deposit, we're doing all the engineering work, we're working out how we're going to mine it and then extract the potash. We're also, I'm very pleased that we've managed to bring forward the negotiations with the Eritrean government, and this helps us get to the permitting stage and conclude our joint venture arrangement with the Eritrean government early, so there's minimal delays in getting financing and getting into the construction phase. Already, our company, we are planning, we're making some moves. We've got some new board members coming on board with us that are going to help us with the negotiations, some proven performers in Eritrea. So that's very new. That's coming to market in a few weeks' time. We've also got a new COO coming on board. He's a high-level ex-BHP mine builder and mine operator. He's going to be coming on, and we're already setting the company up and looking forward to the end of the DFS and into the construction phase, the financing phase. So it's a very exciting time for the company, and we're expecting a lot of the activity to have an impact on the growth scenarios for us moving forward. I might also add that this timeline on this slide is the quickest production timeline in world potash history. The last new potash mine to be built in the world was in the late 1980s in Germany. Contrary to what you may read on the news wires around the world and a lot of hype surrounding potash projects here, there and everywhere. But the reality of the situation is potash projects are very difficult. They are capital intensive and technically challenging. Every single time you look at a potash project, they have those same aspects. And our project is not without its own technical challenges, but the capital cost is certainly about half the cost of most other potash deposits around the world. So we think it's going to be a very good project moving forward. Now, okay, just waiting for the slide to click over. Okay, now this is the last couple of slides are about our other assets. We are going to separate these out, as I mentioned. So all the tax issues and legal issues are being sorted out at the moment. And the annual general meeting we are planning to have this year is in November, and we're looking to vote on the in-specie distribution, and allows shareholders to participate in the new company as well. So shareholders own all these assets at the moment, and we're looking for the best way to realise value out of those assets going forward. Essentially, we've found our joint venture partners found a high quality nickel discovery, and there's very high potential for gold discoveries as we're located right next door to a multi-billion-dollar new producer in Australia called Regis Resources. We have some of their tenements surrounded with our own tenements. Our tenure is very underexplored, and we're making new gold discoveries very easily on our new ground. So very exciting future for this this land package in Australia, but completely separate from the potash, and it will be split out so that it can be funded and managed separately. So I didn't want to talk too much about that to confuse the potash story. Then we'll just flick on. So this is the last slide, just to finish off, which is just a quick summary about what we're doing. Certainly our asset, we believe it's a tier 1 asset. All the majors are talking to us and interested to find out more about the project. As mentioned, China and India are all over us, contacting us daily and weekly, and they have been doing that for 3 years, trying to either buy the asset off us or get involved in the asset, because they have the most to gain. The Indians and the Chinese have the most to gain from owning an asset like this by themselves, so they are not reliant on the rest of the market. Our challenge as a company is to ensure that we're getting the best deal for shareholders and the stakeholders of the project, rather than just selling out cheaply to China or India. And that's not our desire. The desire is to create as much value for shareholders as possible, and that will be to take this through to development. Really, in our view, the only risk to us getting into development is getting taken over, because companies sooner or later won't be able to help themselves, and they'll just have to do something with us. That's the game that we're in. We're pleased to take this as far as we can, and we're building the technical and the corporate team to take this as far as possible and get into production and start making money for shareholders. As I said, we're well funded, over $20 million, which is enough to complete the DFS, and we've got the non-potash asset separation, which one of the main reasons we need to separate the nickel and gold from the potash is to make the potash company more attractive for strategic investment going forward, and securing financial partners. So I thanks everyone for your attention, and that's the end of the presentation, and I'll hand it back over to Jesse, as he's the master of ceremonies.
Right, yes. Hi, thank you, Lorry, for that. So what we'll do now is we'll go into we'll be open to questions. So you should see a question text box along the panel. You can either type in a question or just indicate you have a question by question mark, and I'd be happy to make sure that you have the floor. So, Lori, let's just give people one moment to type in their questions, and then we'll have a Q&A session. So everyone feel free, if you have any kind of comments or questions, to just indicate that, and I'll make sure you have the floor.
Okay.
And I guess, all right, so the first is coming from Dave Stuyvko. Dave, can you hear me? And let's see if we can hear you. Are you there, Dave? No, he may be. Well, I'm going to read his question because I can't hear him. But Lori is asking that we've seen institutional ownership, and how much does management own? He wants to know. And Dave, if you are unmuted, so speak up if you can. But otherwise, Lori, if he just wants to know how much management ownership.
Okay. Yeah, management. The whole management team own about 15% of the company. Now, most of that is held within the original founder of the company, Mr. Liam Cornelius, who's the current director of the company. So, okay. So about 15%.
Okay, thank you for that. Let's wait for a couple more questions to come in. Maybe while we wait for a few more to come in, I could ask you a question, Lori. I know you are well financed for the DFS that's going on. Going into the next phase of construction, how would you anticipate the financing situation there to really go into the finance the capex that would be involved? I think on the website it said it's the low, among the lowest in the industry, but that could still be about $750 million ultimately for full construction. How would you anticipate maybe that get financed?
Well, we're looking at a number of options, and essentially we're not. Well, I shouldn't say this because we've had some great inquiries recently from the World Bank. So there's potential for standard type bank financing linked to the World Bank because of the project we have ticks a lot of the boxes. It's in Africa. It's in one of the poorest nations in the world. It's fertilizer. We're providing fertilizer to the world to feed the world. So it ticks all the boxes in terms of making everyone feel good about what they're doing and what the World Bank's spending their money on. So that's a real option for us. Aside from that, there are the partnerships, the strategic partnerships from producing potash companies showing a lot of interest. But one particular area of focus that we, as a company, we're spending a lot of time traveling to and having discussions with the high quality companies, and that area is the Middle East. Because we are located 1 hour's flight from Saudi Arabia, from Mecca, if you like. This is Eritrea is a very well understood country in terms of the Middle East. So I travel very regularly to Dubai, and recently I was in Oman having roadshows with very interested companies that want to invest in potash and want to invest in their own backyard. So the Middle East is going to be very important for us in terms of sourcing good financing partners, and we've got a number of term sheets out and a number of ways for these companies to get involved in the project. And there's also China and India, which have always been there, so they are very much keen to finance the project. If we can get the appropriate state-owned enterprise in from China, for instance, that allows then the China Development Bank or the China Exim Bank to essentially allow us project funding. So there's a number of different ways to finance this project, and we're looking at the best solution for shareholders.
Okay, thank you, Lori. Now we have a question from Nino Scalamandre. Nino, if you have your microphone on, we can hear you. Let's see if we can hear you.
Yeah, as soon as you're ready.
Yeah, go ahead.
Hi, Nino. How are you? Hello?
I thought I heard him. Nino, are you there? All right, well, Nino, please chime in if you have the opportunity, but let me read off his question. I did hear him for a moment, so Nino, do speak up if you can. But he asked, what's the total cost of the bankable feasibility study and anticipated completion time?
Okay, so we're looking at approximately $14 million to complete the bulk of the feasibility study, and we're targeting mid 2013. That order of magnitude. I'm working very hard to try and complete all the studies by mid 2013.
Okay, Nino, did that answer your question? I don't know if you're there now. Maybe his microphone is not on. Okay, let's see if we have any other questions. Lori, just for one moment. We'll give people just a minute. See if anyone has any questions, please type it in or type a question mark. We'd be happy to open up the microphone to you. Let's see here. Let's just give people 1 minute. If it turns out that there are no other questions, we'll conclude in a few minutes. But I want to give everybody who's tuned in the opportunity to, have a conversation with Lori now. And of course, if you do have future questions, everybody should have my contact information. I'd be happy to get you in touch with Lori directly as well for a follow-up conversation. But this is a good opportunity right now. If you had any questions on the presentation or otherwise.
Mm-hmm. Yeah, well, I might as well. Maybe I can just have just a couple of words to say what are the important things coming up in the next month or so. Just reiterating, we are expecting a new scoping study coming to market, which should be very positive, and just another reason to like our project. Every day we collect more data, we find out something new about the project. It seems to get positive, so we're very pleased with this. So that's happening, so expect that. Also expect some new board additions and additions to the company, high quality candidates that are willing and they're very keen to participate in our project. We're very happy about that. And also I'm hopeful that we can announce some positive news about our relationship with Eritrea and our moving forward on our mining approval process.
Great. We do have another question from Margus here. Are you there?
Hello? Oh yes, sure. Can you hear me?
Yes, I can.
Oh, hi. I actually wanted to, I was curious, given the, I'm sure you're well aware of sort of the chalice, sort of how that ended up in terms of their AMCO participation. So I was wondering, what's your expectation sort of in terms of the price that the government will ultimately get 40% of this project? Because I don't think they have too much money around, and don't seem to be willing to pay the full price. So I mean, are we pretty much you're prepared to give away the 40%?
Oh no, we don't. Certainly don't want to give it away. We know the Chalice guys very, very well. In fact, we've had a lot of meetings, and they're very good friends of ours. So we're using them as a bit of as our friends in Eritrea, and it's a very good relationship. I mean, our project's quite a bit bigger, and larger, and more strategic for Eritrea. So it demands a larger price tag as far as we're concerned. So at the moment we've put an offer into the government, and they are considering that offer for their 30%. I can't disclose what that is. It's highly classified, of course, because it is an open negotiation. And we've structured the offer with the knowledge that Eritrea doesn't have a lot of cash. So so that's about all I can tell you at the moment. If you look at the other deal that has been concluded in Eritrea. That is the Nevsun deal. Now, the government agreed to pay Nevsun $250 million after their bankable feasibility study was complete. Now, in our case, the government has come in much earlier than the bankable feasibility study. They've come in early and wanting to do a deal with a view to them paying less and taking on more of the risk. So we're very confident that we're going to get a fair outcome moving forward, a commercial outcome, because we have we have good relationships in Eritrea, and we know that we're not dealing with a corrupt society. The deals that have gone before us are very open. While they may not be the sweetheart market deal that you might see on the Canadian exchange or on a very beautiful deal on the ASX, it's going to be a fair deal for all participants, and that's what Eritrea is all about. They are really a bit of a socialist country, if you like. They want to do what's best for Eritrea, but at the same time they want to stimulate mining investment in the country to help them grow. So in a nutshell, I'm expecting a bit of a combination between the Chalice deal and the Nevsun deal for our deal. Thanks for the questions.
Thank you. Another thing, actually, if you don't mind, I understand Eritrea has been under some UN sanctions, and that has put off a lot of Western banks and so on. I mean, is this something that you are probably having in mind as well? I guess there's less cares about that from the Chinese or Indian side, I suppose. But just
yeah, no, that's right. There's actually, the sanctions are actually illegal that were placed on Eritrea, but no one seems to care. When someone mentions sanctions, everyone just sort of believes you. But because China voted against or abstained from the vote, where the sanctions were put in, so you need to have a unanimous vote to say there's any sanctions. But just the talk of sanctions has the effect of scaring off most Western banks, as you've said rightly, and China particularly likes to position itself politically for its own advantage in dealing particularly with the resources and strategic projects. So while our view is that most Western banks are out and are we're not considering their options for finance, but what we call it non-traditional sources of financing. And that's China, that's India, that's strategic partners from the potash industry, either buyers or sellers. But importantly, like I mentioned before, it's the Middle East. The Middle East loves Eritrea, and Eritrea has great relationships with Middle Eastern countries, particularly Qatar, particularly Oman, and other players in the region. So we're looking to tap into those guys, use those guys as sources of banks and participation with us, either at the company level, South Boulder, or further down the track in terms of offtake and infrastructure financing deals.
Right. I'm kind of a little bit surprised that you mentioned World Bank, because I would think that sort of the sanctions situation would put a bit of a damper on.
The traditional, there's a number of different subsets of the World Bank. I mean, just only last week, I was having a good chat with what's called MIGA, M-I-G-A, which is the Multilateral Investment something bank. It's basically a subset of the World Bank, and they told me that Eritrea is on their list. In terms of country risk, this was very encouraging. The MIGA World Bank Group, they rank countries in terms of country risk from 1 to 5, 1 being very good and 5 being very bad. And Eritrea ranks as a number 3. So it's in the middle in terms of country risk. But essentially what this group this subset of the World Bank was saying to us is that they will insure our project. So that's very positive, and I'll be having a number of follow-up conversations. I'm heading back to Eritrea to continue discussions with the government on Monday this week or next week. And one of my topics of conversation is the potential involvement of the World Bank with the project. We know the UN, the United Nations and the World Bank and the IFC have all been involved with Eritrea over the years, and where there's a will, there's a way, and we're very confident that knowing what we know about the Eritrean people and their pride in their country and their desire to create a sustainable economy in a proper way is really something that the UN wants to be involved with. It's just a matter of getting through the politics, sorting a bit of that out, and we're on our way. So, but we're not, by no means are we reliant on the World Bank, and we're chasing other appropriate sources of funding at the moment. But I tell you what, it would be nice, and I'm hopeful that we get the World Bank on board. Everything changes in Eritrea, and it's going to be very, very positive.
Thank you.
All right.
All right. This is Jeff.
How are you going, Jesse?
So I don't see any other typed in questions at the moment, so I'd like to give one last chance if anybody has any final comments or questions to type it in now, but I'll also take the opportunity to thank you, Lorry, for this very informative update on operations and finances, and I'd like to thank everybody for attending, and I will follow up with you, see if you have any questions, but of course please contact me if you'd like to continue the conversation with Lorry. Always happy to facilitate that. So if there are no further questions, and I don't see any, Lorry, if it's all right with you, we can wrap it up. I don't know if you had any final words, or we can sign off from here.
Yeah, no, I think that's fine. It's been very good, Jesse. Thanks very much for your time.
Yeah. Okay, thank you, Lorry, and thank you everybody for the audience.
Thanks, everyone.
All right, take care, everyone. Have a great day. Thank you again for attending.
Okay, we'll talk to you later.
Okay.
Bye.
Bye-bye.